everybody. Thanks for joining. I'm just setting up for a little bit of a. I'm trying to set up recording here, just because I don't trust Twitter's recording at all. So bear with me for 5 minutes while I get things set up. Okay, I think we've got it all set up. So currently, there's a live stream that's tied to this Twitter Space call, guys. If you want to check it out, all you have to do is go to the Devil Stockbroker YouTube channel. You can watch my screen in almost real time. I think the Twitter Space call lag and the YouTube will probably be a little offset, so it might be a bit weird. But you know, we'll figure it out. This whole thing is going to be recorded, and we're going to talk about a handful of different things. It's going to be a mishmash of discussion on market news and stuff like that. I'll probably cover a few tickers and things of that nature. But whole reason that I'm doing this is because there's been some developments and some news of some rather disturbing stuff that's been going on. And it's got me a little bit pissed, to put it kindly. And just so everybody knows, like, you are all welcome to jump up here and request to speak. This is going to be mostly interactive because I don't feel like I should be the only one discussing what's going on here in the markets and in the world at large. So let's take care of some stuff with how we did with the trading week. For starters, we got a lot of stuff that happened this week. Let's talk about how AMC performed. So, again, if you're listening in the space call and you want to see my screen, you can check out the YouTube stream that's going on at youtube.com/c/the Devil Stockbroker. And Kat, would you mind coming up here to co-host just to help me handle some of the speaker requests as they come in? volume too low. Let me see if I can fix that. Hopefully this works. Yeah, unfortunately, I can't use my desktop mic at all when I'm doing this. It kind of it does kind of suck. Okay. I was hoping to do this as interactive as possible, so that's why I chose a space call for this. Sorry if it's a little bit impromptu, a little bit scattered, but we'll figure it out.
Yeah, I got the invite for co-host. I'm not sure if we could try to send it to him the same way.
Yeah, I did send the invite. I'm not sure if it got through or if he's having issues.
Okay. Yeah, I'll be on the lookout. If I see anybody who wants to hop on, just raise your hand or whatever, and I'll go ahead and throw them in the mix.
All right, cool. Thanks very much, Mr. Boulet.
No problem, G.
So AMC's got some interesting momentum going on. What I've been paying attention to, just because everybody loves to talk about AMC, I'm still knee deep in this stock with my between my portfolios. So one of my big things with AMC has been OBV, the on balance volume. What I've been tracking with AMC and other squeeze picks is these consistent trends and technical patterns on the OBV, which I'm not sure if that's something that ordinarily gets done when it comes to technical analysis. But I've been watching the OBV and looking at the historical patterns on AMC. And with the first squeeze that happened back in January of last year, there was this 2-month period going on through 3-month period where it was selling off throughout November and December. And it wasn't until like the first 2 weeks of January that the OBV turned around because volume came into the stock towards the buy side, and it shifted the balance of shares. And I think that was when retail investors started getting really becoming really aware of it. And the same thing happened with GameStop, as a matter of fact. So just going back in GameStop's chart history. If we go to this period of consistent rise in the OBV throughout August of 2020, it was basically when the market started returning to normal during the COVID recovery. The OBV was constantly rising as more and more retail investors got wind of Roaring Kitty's due diligence, and stuff kept just coming in. More and more people kept adding their money into the market in favor of GameStop. And after a certain point, there was this huge spike in early January that sent the OBV rocketing to more than 200 million shares on balance. And it was after that it started getting, well, ridiculous, which you can see on the chart if you're watching on the YouTube stream. Oh man, I'm really sorry, guys. I know that the audio is a bit hokey with Twitter. The Twitter space calls really do frustrate me. We'll try.
It's actually coming pretty clear on this end.
Yeah, I think it might be just everybody on YouTube that's having issues with the audio. Maybe I can adjust my. Maybe I just need to adjust my. stream settings. Let me fix this real quick for everybody who's watching on YouTube and not part of the space call.
My brother.
Thanks, man. I realized after he said, I can't use my desktop white. I was like, I wonder why. Oh, yeah, the mobile thing.
Yeah, I knew it had to be some kind of tweaking that need to go on, but shit, we got it, baby. We all here. Let's do it.
Okay, I'm getting the audio fixed now. I think we'll have this working here in a second. Okay, that should be coming in much louder and clearer for everyone. Excellent. All right, cool. I think that's fixed. Y'all in the YouTube comments, you feel free to let me know if you need me to boost it a little bit more. I've got the gang cranked up 3 times, so hopefully that's enough. Anyway, so like I was pointing out with GameStop, it was a lot more straightforward, and the OBV's only been the OBV has been flat for the entire time that it's been trading during this downtrend throughout all the spikes and the waves and stuff. For me, that's a clear sign of algorithms screwing with the stock. But what I was pointing out here was that the OBV showing a major push to the upside as volume came into the stock, I feel was the major trigger because it put shorts so far underwater. And this would have been about the time that Melvin Capital really had lost all of the value in their puts that they had. Melvin Capital was, they were the main player that was shorting GameStop. There were others, but they were the one that was, most prominent in the center stage spotlight. And when they ran out of shares to borrow to sell it short, and there was no more capacity to naked short afforded to them by the market makers, they they took out puts, and that would have happened in 2020. They would have taken out puts that were expiring on a quarterly or an annual basis, and the plan was to cash in those puts, possibly by exercising them to liquidate the positions that they had, or to recover shares to cover. I'm not entirely sure what their exit strategy was, but in any case, when the stock went past $40, like, their puts became worthless overnight. So it put them in a position of like, well, shit, now we've lost all of our liquidity because it was in these contracts for puts that we thought could never possibly lose all of their value. And they had no way of covering anymore, and they also had no way of doubling down at that point. So with AMC, it was a little bit strange because AMCs have multiple squeeze periods. So the first one, again, January, it squeezed with GameStop up to $20, and the OBV lifted and went through this long wedge. And if you look at how GameStop did their squeeze, it went up to $40 and then went sideways for just a few days before it squeezed again. And what's interesting with AMC is now it's tracking with GameStop, but the OBV is still pretty much flat. If you balance this out, the last time that we were trading at this price, $14, the the OBV was all the way down here, about just a little bit less than half of the shares on balance that we have now. So the reason why I point this out is because now that I've looked at all these technical patterns and I've seen how OBV is kind of a sign, not really a a lot of people treat it as a momentum indicator. And when the OBV is rising as the stock is trading sideways or down, it's usually indicator of bullish divergence, meaning that you would expect the stock to go up or as long as the OBV is rising with the price, then you expect it to continue, and you wait for the OBV to curl downward while the price is rising to indicate bearish divergence and that the stock will drop. But what's interesting with AMC is that the OBV has been basically sideways through all of the volatility, and and even as the price is falling throughout this period, the OBV is rising the entire time, and this has gone on for so long that it indicates to me that if the OBV, if enough volume comes into the stock and sends it back above its previous high point, then that would be a major buying signal to jump into the stock. Basically, what I'm saying is that if the OBV crosses these two lines that you see here on the stream, then I'm expecting that within 30 to 60 days, we'd be facing an imminent squeeze. The other one that I've been paying attention to for the same reasons is Progenity. So Progenity has been doing the same thing as well. It had this consistent rise with major volume pushing the price up, and throughout these consolidation periods, the OBV stayed flat and even rose a little bit before it moved up to its high point of $6. And the OBV came down slightly, but stayed more or less flat compared to the price, which just totally sold off. And when you look at that, it just tells you that there's more people buying and holding than there are actually trading in the market. So if all of these individuals are holding onto their shares while the price is this low, it at least tells you that they're waiting for something coming down the pipeline. And with Progenity, it's a little bit uncertain when the announcements are going to come, but we know that they've got some clinical data that they're looking to show. We know that they've got their Precludia product, which is ready to go to market as soon as they have that clinical data that shows and demonstrates that the product is safe and that it serves its purpose, and that the data it retrieves, the results that it retrieves, are accurate. And then secondary to that is their OBDS and their DDS drug delivery systems. So eventually, once we get clinical data for those drug delivery systems, those can start being licensed out for certain products such as Humira. It might be used for research in diabetic treatments, for insulin administration and stuff like that. There's a lot of uses for the smart pill, basically, that they're developing. And it can apply to any other kinds of medicine. It can even apply to things like ibuprofen. So. Any case, Progenity is starting to curl upward. It's hit this base area of support down at $1.15, and it's slowly been rising through the zone of supply that I marked out for the last couple of weeks. So now we're hovering right at that point of resistance of $1.50. We've been bouncing off of it repeatedly for the last 2 trading weeks. So this is the price to beat. With Progenity bouncing off of this area repeatedly, I'm thinking that at the 3rd or 4th bounce is when we might move past it. The other thing that you should be aware of is that Progenity's clinical data is actually got a due date for the announcement. They do have earnings coming up March 17th, and there's actually a deadline, I believe, of March 20th for them to give a release on their preclinical data and the clinical trials for their Precludia product, which, if it is able to successfully go to market, it would be the first rule-out test for preeclampsia, the second leading cause of maternal death, on the market, which is actually a $3 billion market, which I found really surprising that nobody has done anything to create a product for this previous to Progenity, given how long it's been affecting healthcare and healthcare for expecting mothers. So for me, Progenity is a huge buy. I'm mainly just accumulating shares, but if you're looking at call options, if you're an options trader, I found that the April call options were extremely cheap. $2 are trading at roughly 20 to 25 cents per share. $3 are trading at around 10 or 12 cents a share. And we've seen how there's just this huge area of support that's been maintaining its strength. The last time that Progenity was back here was when it rocketed straight up past $2 and made a run for 6 over the course of the next 2 months. So for me, I'm just excited to see it break this price of $1.50, $1.60. And then the last one that I'll cover is BBIG. So BBIG is the other star of the show that's got everybody's attention lately. BBIG has established 3 higher lows now with each of these waves since it had its sell-off from $5. Well, $5.60 if you count this high point. I believe it was $5.90 or $6 in pre-market trading that day, and it got slammed shortly after. But in any case, BBIG's sell-off was almost entirely done through shorting because the short interest skyrocketed the entire time. And now above $4, most of those shorts would actually be in a losing position. So if at any point we see BBIG make a run for $4, then we know that that's going to put pressure on shorts and will probably encourage them to exit their positions post-haste. Not guaranteed by any means, but that's what most of the research is telling us. If we look at BBIG's price performance and we compare it to its short interest on Ortex. I'm just going ahead and jumping over to Ortex really quickly so I can get a look at BBIG's current updated numbers. Wrong BBIG. So currently BBIG's short interest is at 30% of the free float, or 29.46% if you want to be exact. There's 36.21 million shares currently shorted against it, estimated by Ortex. The exchange reported short interest is dated back on January 18th with more than, January 14th with 33.5 million shares reported short. Right now, their average cost to borrow is 211%, and the cost to borrow maximum is 259%. There's been a drop in the days to cover since the short interest is slowly lowered down a little bit. The average days on loan continues to rise, meaning most of the shorts are holding their position, even as shorts appear to slightly be decreasing. It may also be because the float is increasing due to some issuance of warrants. So there's a slight increase, a slight amount of dilution. I think a maximum of around 4.5 million shares, which for BBIG is not a whole lot. And those would only actually enter the float if they were exercised, which, if I recall correctly, the warrants are issued for a strike of $8. So in order for those to be eligible to exercise, the stock would have to be trading at more than $8 anyway. So it's not a dilution that I would even be close to afraid of. It doesn't make sense to exercise warrants when you're not trading above the strike price for at least some time. And those are good for several years.
Hey, TD, I don't mean to interrupt, but someone in Discord, Verde, just brought to my attention that Sensionics actually just had an SEC filing. I DM'd it to you.
Oh, no kidding. Sensionics. Okay. So we'll probably cover that one too. I've been in Sensionics for a long time. Let's go take a look. A Schedule 13G. Okay. So this is a report for a change of beneficial ownership. Oh, really? BlackRock. BlackRock is playing with Sensionics. Okay, that's interesting. All right. So the summary of this filing, this new 13G on Sensionics, is indicating that BlackRock now holds more than 5% of the outstanding shares in Sensionics, and they now beneficially own more than 31 million shares of Sensionics by themselves, which that is in fact 7% of the entire stock. That is exciting. Actually, BlackRock is it's not a force to be messed with. This company in particular is responsible for most of the home sales on Zillow. They purchased I want to say 55,000 properties, single family home properties on the West Coast during the entire last 2 years in total. That may even be more now since I last looked at that figure. But yeah, BlackRock is, they're also a major investor in AMC, in GameStop. And I find it interesting that the price rise in Sensionics is that has happened in the last several days. This might be the explanation for why. If there has in fact been a 7% change in ownership towards an institution in Sensionics, then that means that BlackRock may have been purchasing many of these shares in the open market, which could have been the cause of this recent price lift. Looking at Sensionics charts, we might get a little bit more insight into this. So let's take a look at Sensionics real quick, and then we'll move on to the real reason why I started this space call. Ooh, wow. Sensionics, 3.34 on its chart, down. It is up since since it started trading this morning. It has gone from $2.10 or $2.11 all the way to $3.34, and that's where it's currently trading in post market. That is fantastic, just amazing. Let's see, January 28th, it was trading at, January 28th, it was trading at $2.11. And now we're at $3.34. So in 7 days, it's had a 60% rise in its stock. Man, I'm so glad I bought those calls. So for those who don't know any of my DD on Sensionics, Sensionics is actually they're another biotech company, not unlike Progenity, but they're focused on insulin and diabetic treatments. Specifically, what their product is doing is they're creating a continuous glucose monitor. That's a device that reads your blood sugar levels. Their device actually is about the size of a grain of rice. It's a little chip that gets inserted in the arm with just a small incision. It's not even a surgical procedure. They just cut a little incision, put the chip in, close it up with a few Steri-strips, and then you're good to go. And it syncs with your smartphone to tell you what your blood sugar levels, and it even can tell you other nutritional information on your blood, like letting you know if what your like blood cell count is, and platelet counts, and cholesterol, and things like that. It actually has all those capabilities. It just hasn't been marketed for that since its main purpose is to serve as a reading device to keep track of type 1 diabetics' blood sugar levels and let them know, hey, if your blood sugar is getting low, you probably need to do something about that, or if your blood sugar is too high, you need to take some insulin. So they've been waiting on FDA approval for their 180-day product, which exceeds their nearest competitor's best product on the market by more than 10 times. Dexcom's product, the G6 series of transdermals, which are basically a needle that gets shoved in your stomach to read your blood sugar levels. That one only gets to sit there for 14 days before you have to change it out. Sensionics chip, if they get this FDA approval, will last for 180 days. And then once they get FDA approval for that, they have another one for 365 days, a full year that's ready to go. They just need to get approval for this one so they can send in their FDA application for the 1-year product. So there's all kinds of great things going on for Sensionics. They've just been waiting on the FDA to get its foot out of its mouth and its head out of its ass. So yeah, Sensionics is looking like it's getting ready to make a big turnaround. And you may notice, oh, my OBB is not displaying properly. So let me fix that. Yes. Yes, yes, yes. This is what I was waiting for. So OBV, I charted on Sensionics just the exact same. And if you notice, Sensionics had this same event, major squeeze, and the OBV skyrocketed and then came back down over time. And during that time, there's been a second squeeze. This actually happened right after AMC squeeze, like literally the day after the OBV rocketed up, and it hit another high of about, what was this? It was $4.58 at the high point, and then consolidated again, and now it broke down below. And that's what I've been waiting for, because I've been watching these same types of plays, these squeeze plays. Whenever the OBV breaks down really far below, then it suddenly makes a break upward. That's when the momentum shifts, the volume comes back into the stock, and you see the massive price movement to the upside. So that's what I'm waiting for Sensionics. I'm expecting their FDA approval is coming very, very soon. They actually kind of teased that they were expecting a word from the FDA about 3 weeks ago. And they were expecting an answer within 30 days. And now their earnings is coming up in March. So there's a lot of catalysts for Sensionics for it to make another move. And with the stock trading at like below $3, like it was such a steal. This is such a great company. I don't know why they're trading this low right now, but what can you do? I guess just take advantage of the discounts. So of course, none of this is financial advice. I just calling out some of the things that I'm seeing in the market. And now we can get into the real topics, the real talk. Why I wanted to talk to people on a space call rather than just hosting a live stream by itself. I see you guys in the YouTube chat, and I just wanted to let you know I'm not gonna read any more tickers since we're jumping into a whole different type of discussion. But we'll go back to reading tickers another time. I just wanted to talk a little bit about a bit of a difficult topic that's going on currently now between the COVID crisis and some very scary legislation that's got me just a little bit pissed off. Go ahead and switch windows here. So something has happened recently with the nursing field. This is a personal topic for me because my wife was a nurse once upon a time. She was an RN. So I got to experience firsthand as a having a nurse in my life that was going through like the way that patients treat their nursing and doctor staff, the way that hospitals and their administration treat the staff, and just how underappreciated doctors and nurses especially are in the field. And that's why I wanted to have this discussion, because something is going on that I feel that everybody in the world, not just doctors and nurses, need to be aware of, because it's going to affect American society in a very profound way. So what's been happening recently is there's been a lot of legislation targeting nursing because of how COVID has affected us so strongly. The biggest one that happened recently before this one I'm about to talk about was there was a group of nurses that got a better offer to become traveling nurses, so they were getting ready to quit their job at a hospital. In the course of doing this, however, a judge, a local judge, placed an injunction, which is basically a statement saying you legally cannot proceed with what you're about to do, an injunction against finding better employment, that they could not go and pursue this new opportunity until the judge made a ruling on whether this move was lawful. And the reason why they did this was because the hospital staff were saying that the nurses were endangering their patients by choosing to make an attempt to get better gainful employment. This is actually a huge violation of rights and flies in the face of what a free market means. So when a judge tells you that you can't go work somewhere else until I say you can, when it's you just looking out for yourself and your family because you want better pay, that's an entirely fucked up situation. And it should scare the hell out of everybody who's listening on this call that this happened, that this idea was entertained, and that a judge felt that he had the constitutional privilege to write an injunction against nurses for a decision to terminate their willful employment, at will employment, with their current employer to go find better employment. What I find so disturbing about this is that the hospitals don't treat nurses and doctors well. Most nurses that you have met, if you haven't met a nurse in your life, or if you haven't met a doctor and you don't know someone like that in your own personal life, the fact that so many of them have stuck out COVID, this entire disaster, for the last 2.5 years, going on 3 years of a global pandemic, is astounding to me. Because when my wife was an RN, she was working 14 hours a day, 4 days a week, sometimes 5 days a week. And on paper, they're only 8-hour-a-day employees. But that's not how it actually works in practice. The reason is because most of these nurses that are working in major hospitals, think of like Metro hospitals or UH hospitals. If you've heard of the Cleveland Clinic, that's another one. All of these major hospitals that are entirely for-profit hospitals do not focus in the slightest on the care of their staff. Most of those, when my wife was working as an RN, she was on a floor with a nurse to patient ratio of 5 to 1. and the hospital's policy was 1-to-1. What that means is that every patient should have a dedicated nurse. But in actuality, each nurse had 5 patients that they were in charge of. And she worked on a floor where people were actively dying for many different reasons and had a plethora of health complications that they could go into shock. They could suffer withdrawal effects from medicine. They could be having allergic reactions to the medicine that they were having, or they could just be having a heart attack for no particular reason. So what I'm trying to say is that it required an immense amount of dedicated attention to each patient, and you have a situation where every single nurse is in charge of 5 or 6 of these patients who are in the process of actively dying or at least need extremely attentive care. You couple that with the complications of having STNAs that try their best but are not. STNA is a state tested nursing assistant. Not the same as a nurse. They didn't go to nursing school, but they assist the nurses in patient care and doing things like taking readings, vitals, and stuff like that. All of that's extremely important work, but these nurses have to watch these STNAs like hawks. Just because if somebody makes a mistake, it's the nurse's fault. So if just say that you're in the hospital and you have to be treated for we'll say that you're being treated for a heart attack, and your nurse is extremely busy. She's caring for another patient down the hall, and she asked the STNA, go take a vital sign on my patient. And the NSTNA makes a mistake, if they make a math error, or if they don't do it properly in any way, or don't do it at all, if they forget, get distracted, then it's the nurse who gets sued. If that patient dies or has to go into surgery because of an emergency, because the vitals weren't taken properly. And you'll notice that in these major hospitals, you have people, you have fewer and fewer nurses and doctors because the pressure is so overwhelming for them. That was before COVID. That was, in fact, 4 years before COVID. And things only got worse from there. Read the news on nursing shortages and think to yourself that if I was in the hospital because I had a heart attack, or I got hit by a car, or I had a bad fall, or if I was diabetic and had a crisis, and I was laying in the hospital, and the hospital told me that I had a dedicated nurse whose only job was to pay attention to me and make sure that I was okay. But then behind the scenes, the hospital is forcing these nurses to have 6 of these dedicated patients. Now, the average nurse-patient ratio is somewhere between 8 and 10. You have nurses and doctors that are getting sick constantly from COVID and treating people continuously throughout this entire disaster that we've been facing as a planet for the last 2.5 years. And they're getting sick of it. They're really getting sick of it. I know everybody who is here on this call listening to me right now, we've all been or known somebody that struggled through life financially. And we all understand that in order to take care of ourselves, take care of our family, we have to have the right to be able to pursue gainful employment. We all have to be able to do what's right for us. And that's the meaning of a free market. But now we have legislation that is being leveled at nurses and doctors that say you are not legally allowed to quit your job or we will put you in jail. If that doesn't scare the shit out of you, and if it doesn't make you violently pissed off, then you should probably do some research. You should probably be looking a little bit further beneath the surface and start to understand the implications of what that means, because this sets a precedent. Yes, I understand that if nurses leave entirely, and if all nurses were to disappear overnight, a lot of people would die. Yes, that is absolutely true. A lot of people would die if nurses weren't around, if they weren't there to advocate for their patients, if they weren't there checking their vital signs constantly, letting their doctors know where their attention is needed, double checking the doctors, because as overstaffed as the nurses are, the doctors in some hospitals are even worse so, because they're working 18 hours. Some of them are sleeping in the halls. Some of them have been wearing a mask for 24 hours straight and had to sleep in it in the break room or on the floor because they can't stop, because of how many people are sitting in ICU beds dying actively of COVID because they can't breathe anymore on their own. These people are tired. They've been doing this shit for 2.5 years. I hear people bitching about having to wear a mask at work for fucking 8 hours a day. I'm lucky that I am working from home. But I will never bitch about having to wear a mask because I see how nurses and doctors are treating people constantly for COVID and other diseases that are putting people's lives at risk. They're still just 24/7, catching sleep wherever they can, falling asleep for 10 minutes, 15 minutes here and there in between having to go from one patient to the next. It's a miserable life. It's miserable what they're having to go through, and it's exacerbated by just how few of them there are. There's a reason why there's a staffing shortage. Why would you want to do that? Why would you do that to yourself? Doctors and nurses I have the utmost respect for that they've stuck it out this long, and all of them that want to quit, I don't blame them. I think they should quit. Honestly, most of us don't deserve them. The way that patients have treated doctors and nurses throughout this pandemic, spitting in people's faces because they're wearing a mask, telling them that their only task in life is to serve them as a customer service. That's what's wrong with the system that we have here, is that all of the hospitals treat their business as a customer service business, and that nurses and doctors are representation of that customer service. It stopped being about patient care and keeping people alive. Honestly, if I was being an asshole in the hospital and misbehaving, I would want the nurse to punch me in the face so that they could actually save my life. Because that's the only thing that really makes sense. Having nurses that have to tiptoe around people because they're too afraid of getting sued if they say the wrong thing, or if they step on somebody's toes during the course of trying to keep someone alive, that they can get sued, lose their entire livelihood, their license, their registration, their home. So the thing that I'm getting at is that I to the utmost, I respect nurses and doctors for what they've been doing, that they've been able to stick it out this long and keep so many people alive and are still enduring this daily, actively. I would just say that if you haven't yet, if you really want to get an understanding of just what they're going through, go look at pictures on Google of nurses and doctors who have the scars around their ears and their face from wearing their mask all day long, and know that they're still there going to work every day, even though that they are suffering all the time just trying to keep people alive. And meanwhile, they're dealing with an administration that is unsympathetic, that doesn't give a shit about them, that doesn't really give a shit about the patients or what's best for them. The only thing that they care about is their bottom line. And now when nurses are looking for an opportunity to get out in order to save themselves, in order to do what's best for their family, and in order to find better gainful employment, now they're being threatened with court action to stop them.
And don't mean to interrupt you, True Demon, but it actually looks like we have a speaking request from a Mr. Dr. Asim. Would you like me to bring him up?
Yeah. Anybody who wants to come up, especially if you are in the nursing or doctor field, please come up. I would love to speak to you.
All right, Mr. Asim, you should be all good to go.
Hey guys,
Hello.
True Demon, thanks so much for saying all those. I'm a medical doctor. I haven't started our residency yet, but obviously a lot of my friends have, a lot of my colleagues have, and everything you've said is 100% true. So thank you so much for recognizing and acknowledging all of the hard work that the healthcare workers have been putting in for the past 2.5 years with the pandemic going on. You caught I was just listening passively, and then you caught my ear when you spoke about the legislation that was being put in place and the lawsuits and whatnot, and the entire conversation about nursing shortages and doctor shortages. The only reason I requested the mic is to just maybe highlight something that most people may not be aware of, and that is the fact that at this very moment in the United States, it's approximately 10 to 13,000 medical graduates who have not been able to attain a residency position. So a residency position would be an internship where you start becoming a doctor after you graduate from medical school. And it's not because those 10 to 13,000 people are incompetent. It's because there are not enough residency training positions in the United States since I think 2002 or 2009, somewhere around there. They haven't been increased because of a bill in Congress where the AAMC, which is the governing body of American and because the training's provided by Medicaid, um, it makes it even more complicated. So if anyone who's listening, if you guys can reach out to your senators, your congressmen, whoever it is, to advocate for the 10 to 13,000 medical graduates who have loans in excess of 100, 200, $300,000, who are currently not working as doctors, what they've trained to do for the past 8 years, I would really appreciate it because I think that's something people really need to know about. Thank you so much for giving me an opportunity to speak on this space. I really appreciate it. I'm done speaking.
Hey, thanks, Dr. Asim. Really appreciate you coming up to speak. If you are also if there's anybody else who's listening that's also a doctor or a nurse, I'm very happy to bring you up to talk about this, what's going on and what your experience is like, because what I'm actively trying to do here is get the word out, because what's currently happening in America with the stock market, which is basically consumed the bulk of my attention for the last year since the buy button was stopped in January of 2021. There's also been other crises that have been occurring throughout all of America and the rest of the world. And it's all linked to the same thing. It's all linked to greed, greed of the elite and greed of Wall Street, greed of major pharmaceutical companies. It doesn't matter what industry it is an all-consuming beast, and is negatively affecting every facet of our society in ways that we can't even begin to fathom until we start connecting all the dots. And one of the most obvious ones, and the ones that are most personally important to me, because I had a nurse in my life for so many years who this is important to. I definitely feel it. I'm not in the medical field myself, but having been married to a nurse, I definitely feel a certain kind of attachment to the brother/sisterhood of nursing staff, and it really is a brotherhood, sisterhood. So I'm gonna go into the story itself that now has gotten most of my attention here. So as I said before, the injunction that was placed on those nurses that were looking to make a change and get out of their current employment so that they could pursue a job becoming a traveling nurse. That injunction was revoked, meaning that they were then allowed to pursue their next gig, only because there was a massive outcry from the local community and from nursing at large. It got a huge following on social media. That pressure forced the judge to realize the error that he had made in judgment, deciding to prevent somebody from terminating an at-will employment regardless of the reasons, and that the prosecution seeking to punish these people for trying to do what was right for them and to exercise their right to terminate their employment to go and seek a better job was being infringed upon. Everything that the prosecution did violated so many rights. And the fact that that injunction was placed demonstrated that the judge was on the side of the prosecution. There is no other way to assess this. If the judge decides that at-will employment no longer applies to the employee, then you should be very, very scared of what comes after that decision. So going on into the legislation that we're talking about, the headline that I've had here on my desktop here for the last several minutes, quote, "This legislation could cap travel nurse pay, staffing agencies accused of, quote, price gouging," unquote. It's no secret that there's been a disparity in agency nurse and excuse me, let me first credit the author of this article, Chani Brucey, BSNRN. It doesn't state where she's employed, but she's a qualified registered nurse that wrote this article, which I'll now read back to you. It's no secret that there's been a disparity in agency nurse and staff nurse wages over the past year and a half, and the disparity is becoming increasingly bigger as the weeks pass by. Travel nurse pay has never been higher since the pandemic started, with August numbers showing a weekly average of over 2.5 thousand compared to a December 2019 average weekly pay of just over 1,000. And as staffing issues continue to plague the entire country, they show no signs of slowing down. However, in an attempt to stop the ballooning wages and perhaps better balance the gap between staff and travel nurse pay, some states have introduced legislation to cap agency nurse pay. As you can imagine, the idea has a lot of people talking, so here's more on what this legislation is proposing and how nurses are responding. The state and federal moves. During the pandemic, there's been both state and federal moves towards enacting legislation specifically aimed towards regulation of staff agencies and limiting travel nurse pay rates. The American Healthcare Association and National Center for Assisted Living, Leading Age, and Coalition of Long-Term Care and Senior Living Organizations sent a letter to the White House to officials warning against price gouging. essentially these are home care nursing facilities that are looking to put a stop to increasing pay wages for traveling nurses because it's preventing them from being able to staff their agencies. I'm going to go ahead and stop here since. Go ahead, Kat.
I was just about to say, it looks like we have a hand raised from EA, but not the sports, Mr. Ernesto. He should be able to speak.
Yeah, I just wanted to say thank you so much, guys, for giving me the opportunity, Kat and Demon. I just wanted to say very quick, I had an insurance office, medical insurance office in Orlando, Florida for years. And let me tell you, man, what these people have between cancer and diabetes is pretty pathetic. I heard there was a doctor in this conversation not too long ago. Let me give you an example, man. I've been writing Medicare insurance for ages now. And at one point, I went ahead and did a Medicare plan for this member. And believe it or not, I got called by the doctor. They call this example I'm gonna tell you guys is called cherry picking, they call it. Basically, they pick and choose the risk that they want to insure. So what happened is that I got this guy into a Medicare Advantage plan. He was someone that had cancer in the past. Most people don't realize that these doctors, based on the contracts that they have with the different insurance companies, if you go to a hospital on an emergency basis or something from this doctor that he's your primary care doctor in this case, if you put a claim, the contract that they usually choose obligates them to pay, it's called a shared cost. So they share the cost of whatever that patient develops in an emergency room or something. What I'm trying to say, and I give you back all the mic and everything back to you guys, but what I'm trying to say is that we need to raise awareness, because let me tell you something, it's so sad that in this time in life, you have the technology to put people in a different planet, and you don't have the technology to cure a disease in your own planet. And it's very pathetic what they're doing with the medical field. So I just wanted to throw that out as an example, because I heard you, Demon, said if you have anybody that is in this field, and but I mean, find out, guys, because what they're doing with patients all around, especially in the States, it's horrible. Thank you so much, guys.
Yeah, definitely agree. And it looks like actually we had a doctor, then we had you, and now we have another speaker request from a pharmacist. So this is going to be an interesting medical talk. If you wanted to hop in, not too, Brad.
Yeah, appreciate you hosting this, Demon. I'm a pharmacist in a long-term care assisted living facility. So this past 2 years has been, as I'm sure all medical people can tell you, has been especially hard. Just a lot of staffing changes. Everybody's extremely understaffed. Trying to provide best care we can to all the patients we have. Nursing, like you hit it right on the head. I mean, nursing is really, really struggling. And they were struggling pre-pandemic. I mean, we already had a nursing shortage before this all started, and now it's just exponential. You got so many nurses that want to give the best care they can, but they're just, extremely overworked. And it's especially evident in some of these facilities that we have. I guess I would just say, been seeing a lot of people, especially coming through retail, like your Walgreens, CVS, Kroger, some of those that you pick your meds up at the pharmacy. Know that, I can speak for the pharmacists and the pharmacy techs. We're doing our best to get things ready, and we don't have as much staffing, especially now with the pandemic. So it's really hard on us, as I'm sure all the nurses and doctors can tell you. Everybody is doing their best, and maybe just think about that next time you go pick up your meds or you're in the hospital. Just thank the people that work in there, because if it were up to us, we would have a fully staffed, a lot more people out helping take care of you all. But just wanted to say that maybe just thank somebody next time you go in a pharmacy or a doctor's office, because everybody's working really hard. Thanks.
Thanks, Brad. I appreciate you coming up to speak. That does bring up a good point. So, everybody who's on this call has probably been told at one point in their lives or another to thank a veteran for their service to their country. I feel that goes doubly so for your doctors and your nursing staff. Because right now, the disaster that we're facing as a planet together is being handled by a different kind of soldier that is able to fight a front that happens on the microscopic level and the macroscopic. Right now, the people that are taking the greatest loss, that are suffering the most, that are in the trenches every single day, are doctors and nurses. And just like all things, politics gets in the middle and profits rule the decisions made on the field. And right now, I feel that doctors and nurses are being crippled by their by the forces that rule us all, that being money, politics, government, law, and the motivations of the people that are standing over us, making decisions of who to sacrifice and who to keep around. So, given that we're all on the ground here together in the middle of this disaster, you should probably thank your veteran doctors and nurses every time you meet them, and exercise a little bit of sympathy if you're in the hospital for what these people are going through. Because although they put on a brave face for you, their job is to make sure that you stay alive, that you're well cared for, that you are well treated. They're doing the same thing for hundreds of others that come through their door every single day, so that millions of people can survive this pandemic, and that we can come out on the other side with as little tragedy as possible. And it's very upsetting to me seeing how many of them are suffering in silence, and that there's no gratitude shown to them for what they've done. I was a soldier once, and I've been thanked as a veteran plenty of times, while simultaneously knowing that I've not seen hard combat. I've not been through things that many other veterans have. And I absolutely think that that doctors and nurses right now are going through far worse things than anybody can imagine. So treat them the same way as you would just seeing a soldier in uniform at the gas station or at a restaurant. Think of them the same way. They're in a fight every single day they go to work. And they're doing that work 8, 10, 12, 14, 16, 18 hours a day. And there's the fact that they're still there is it speaks volumes to their endurance and their tenacity and their commitment and their passion for the work that they're doing. Because I know that if I was in that field, I wouldn't do it. I wouldn't do it for people that spit in my face for trying to keep them alive. I'd walk away the first day. People screaming in their faces about, oh, why aren't you treating my dad? Why aren't you in the room with him? Why wasn't he there? The answer is because they have to treat 8 or 10 other patients because there's nobody left and it's just them. The staffing issues are, one, it's not their fault. is their leadership's fault. So, back on the topic of this legislation that we're talking about, I'll go ahead and spare everybody the major details, or the minutia and the finer details of the whole article. Essentially, what the legislation is doing is it's looking to place a cap on wages for traveling nurses. The reason why is that travel nurses are now making more than most hospital nurses, and it's it's kind of funny. It's almost like imagine if fry cooks at McDonald's who were still making minimum wage suddenly decided, you know what, I can flip burgers for these assholes and make $7.30 an hour, or I can just go and rent a truck and I can flip burgers out of a trailer and sell those burgers for $3 a piece, and I can make more money just in an hour of work than I did all day long. And the judge comes by and says, well, you can't do that anymore. Now, I don't want to reduce nursing and doctors to fry cook status. That's not what I'm trying to do here. I'm just trying to illustrate a point that somebody who is looking for an opportunity to do better for themselves because the pay has not adjusted in the last 10 years for inflation or for cost of living and societal economic changes. Basically, we've been in a massive recession that nobody's been talking about since 2008 when the housing market crashed, and we're still reeling from it. And now it's exacerbated by this massive pandemic. You have hospitals that are making millions and millions and millions of dollars every single month, much less years. And they're not, that's just their profits. They have the money to pay nurses a better wage. They have the money to hire more staff. The problem is that they won't. And it's funny, this was pointed out to me a couple days ago that somebody was looking to go back to their old job that they had voluntarily left during the pandemic. There was a help wanted sign at their old job doing the exact same thing that they were doing before. And that person went to go and apply for the job to go get their job back. And they said, no, you're not qualified. And it's funny, if you actually look in the clause of the CARES Act, there's an exception for the rule of companies that apply for the PPP loan forgiveness. The PPP loan is for those companies that are seeking to be forgiven their loan that they were given by the government during the initial COVID crisis because they couldn't staff their businesses. So they have to pay back that loan at some point, except there's this one exception in there that if they cannot hire back their staff because there's no qualified candidates, then they are exempt. And so what companies, at least as it appears to me, are doing is they are decidedly putting out as many ads as they can for as cheaply as possible to get as many people in the door as they can. But when it comes time to actually do the hiring, they just say, sorry, you're not qualified. And if they do that long enough, then they'll be forgiven their PPP loans. I'll have to pull up the exemption. But I just thought that was a pretty funny coincidence, and I can't help but feel that maybe this also applies to the nursing and doctors shortages, considering that what the doctor who came on just a short while ago told us about how a whole bunch of residents or graduate doctors are waiting in line, over 10 to 13,000 doctors who are waiting to take their residency aren't able to because there's just not enough people to train them, and there's no openings at the hospitals. Because in order to bring in a resident, you actually have to hire them. That's actually part of the deal. And all doctors have to go through residency. They have to. They've graduated medical school, but if you don't go through residency, then you can't be a doctor at a hospital flying solo. And I can't remember if it's 2 or 4 years of residency, but there's a period in which you have to train under another doctor. You have to train under somebody who's a qualified medical doctor in your field in order for you to be able to go out and do it on your own. So if you want to be a clinical doctor, if you want to have your own practice, you have to go through residency. There's 10 to 13,000 of these guys and girls waiting to go get their training so that they can go be doctors and they can go out and help people. And they're just not being allowed to do it. There's graduates from nurses. There's graduate nurses going on down the line, thousands of them, that are waiting for an opportunity to get into a hospital, but they just get rejected on qualifications alone. During the worst possible nursing and staff shortage that hospitals have ever seen, during the worst global pandemic since 1913, or 1918, excuse me. Like this whole situation just boggles my mind, that we can be simultaneously short on staff, that nurses and doctors are in such short supply and they're willing to do anything to get them in the door, but except pay them a reasonable wage. And now simultaneously are going to do whatever they can, including going to judges and lawyers to try and do things legally to stop them from leaving. And now we've gotten to this point of, now we're going to stop paying you more, and we're going to put a cap on all of our competitors' pay, what they can pay you, so that they can't steal you from us. Because that's how they see it, is that traveling nurses is just a scam industry that's just designed to go and take staff away from hospitals. And that's price gouging. That's not price gouging. That's offering somebody, that's making a better offer. That's free market. Who the hell has the right to tell somebody in a free market capitalist society that that if you want to get better gainful employment, you're not allowed anymore just because you have this particular job title? That goes against the entire premise of free market. Just a reminder, if anybody wants to come up and speak and talk to me and ask questions, and also if you're a doctor or a nurse who's going through anything, you just want to talk or get the word out there, please, this is your platform. So the legislation itself is essentially being designed so that staffing agencies are not able to offer nurses a pay over a certain cap. Currently, I believe that the average nursing pay is somewhere in the neighborhood of $28 an hour. I'll have to go and double check that figure actually. Yeah, average nurse hourly wage as of 2015 was $32.45 US. So for somebody who's a college graduate, it's that's actually it's kind of, well, it's not a fair wage anymore for somebody who's college graduate, especially in the field of medicine. Most nurses these days, with the changes to inflation and the hours that they're being asked to work and the amount of attention that's required of them, just the cost of nursing school, $35 an hour really doesn't cut the mustard anymore. Because when you go to nursing school, you're absorbing like between $40,000 and $60,000 in debt just to go to school. That hourly wage won't cover your tuition expenses. If you took every single dollar that you made and put it up against your student loans, you wouldn't pay them off for 4 years. But nobody can do that because everybody has to pay $1,000 a month for rent. They have to pay $600 a month for food if you're scraping the bottom of the barrel and just eating at the cheapest food that you can find. You got to pay for gas. You got to pay for your kids' child care. Average expenses in the United States have gotten so ridiculous that if you're making less than $20 an hour, then you're basically living below the poverty standard with how fucked up everything has gotten with our economy. And nurses that get past the NCLEX exam or the whatever the exam is to actually go be a nurse it's incredibly hard. I have mad respect for just the level of intelligence and the attention to detail that nurses and doctors are able to do, doing these ridiculous calculations in their head and all the formulas they've memorized, much less knowing every single part of your human anatomy just off the top of your head. Like, all of that is required just to get out of nursing school, just to graduate. You literally have to memorize every single name of the human anatomy and be able to calculate things like ampules. I didn't even know what the hell an ampule was before I met my wife. And being able to convert that back and forth to imperial and metric formulas in your head on the fly. Brad, you're a pharmacist. Tell me if I'm being truthful. Please tell me if I'm being real.
You are right on the money. I mean, unless you're really in the medical field and you kind of see what nurses do on the daily, it's hard to really kind of put into words how much they do. That just goes overlooked. I mean, like you were saying, the nurses have to do so much. They have to take care of so many people at once. They get overlooked and oftentimes undervalued. Real quick, I was just going to say, can you provide that link to that case with the judge in this chat? I think I saw it on another chat. They were able to put like a link in this group, or maybe just DM me if you could.
Yeah, let me go see if I can find it. I believe it was published on nurse.org. But I'll see if I can publish that story here in a tweet.
It's very interesting. We do have a lot of travel nurses that we're using ourselves. We have a couple travel technicians that are actually working with us, just because we're just so short staffed. I mean, it is impossible to find anybody to work. It's crazy. And with the assisted living and long-term care industry, I mean, with having all of these shutdowns of, back in last year, a lot of people, rightly so, got nervous about having their loved ones in long-term care assisted living. So we had a bunch of people take out their loved ones and keep them at home if they could. Then once jobs came back, people couldn't take care of their loved ones at home, so they put them back in the nursing home. So we've just had up and down staffing problems, getting people to come in and work. And a lot of people, a lot of people want to do the work, and they're tired, frustrated, don't have the help that we need.
Thank you very much, Brad. Oh, geez, I realized I was hot micing the whole time with my keyboard. I apologize to everybody. I just tweeted out an article from the LA Times that was speaking to that story. So if you want to check that out, that just went out here attached to the space call. In fact, why don't I just go ahead and go to the trouble of just bringing that onto the stream so that everybody can see exactly what the hell went down. So this was a story from the LA Times. When a medical team quit, this hospital sued to force them to keep working, by Michael Hiltzik. So this is the story that you're looking for if you want to hear about it. But essentially, this was the case that was brought up against these nurses that there were 7 of them that were looking to quit their jobs and go work at another hospital, or I believe that they were trying to go work as travel nurses. I'm trying to remember which one, but in any case, it was this judge, the honorable or dishonorable Mark McGinnis, granted a temporary injunction to prevent them from taking up their new jobs. He did not order them to keep working at their original jobs, but it essentially basically put them in this between a rock and a hard place of, well, you can't go work at the next place. And now the hospital was, it was prosecution that was brought up by the hospital itself to stop them from quitting. So that was, this is the major story that went out some time ago now. The story here was written on the 24th, but I believe it was, it happened much earlier. The story itself was a month in the making, I believe, by the time that it circulated onto social media and went viral. The point of it, though, is that a judge was brought this case by a hospital that said, our workers are quitting because they want to find better employment. You need to stop them because they're trying to find, they're going to put their patients in danger by doing so. I don't know what mental gymnastics this judge performed in order to arrive at the conclusion that that injunction was constitutionally valid, but he did. He ordered it and stopped them from going to work at their new job until enough people got wind of it and decidedly shifted his opinion because he realized just how many people he had pissed off. So that injunction has been reversed since then. That it is no longer the case now. But so what the story that I've been trying to get to lately is and that's what I want to talk about. I want to talk about how nurses feel about this whole thing, how doctors feel about it, I want to know what other people's opinions are. I want to know what everyone is thinking, because in what I'm thinking right now is that the entire function of our free society is completely breaking down if the law is now stepping in to say that people no longer have the right to go and seek better employment. It doesn't matter what job you have, as far as I'm concerned. If the law steps in and says you can't quit your job, well, what does that mean? What does that look like? If the law is going to bar me from being able to seek better employment elsewhere, is that really any different than indentured servitude? So currently there's a petition going out on change.org at the moment that's pursuing writing a signed letter to Congress in order to put a stop to these caps on nurse pay.
Well,
I'm not
True Demon, it's not about nurses only. Like what he's saying is, like, for me, it's like modern slavery. I mean, like, how, like you said, I 100% agree with you. Like, we live in a capitalist market. Capitalism, like, you know, if the capitalism worked like for them, that's a great thing. But if the capitalism works like for regular people, they like kind of get scared and like trying to implement like something. And like, can you also share that petition on the change.org? I'd love to sign that one.
Yeah, absolutely. So I just tweeted that petition out literally as you asked. So that's out there now. Yeah, if anybody wants to sign the petition in order to encourage Congress to put a stop to this and prevent this legislation from going through, I think that absolutely needs to happen. And everything that's been going on has taught me is that collectively, excuse me, Base, would you mind muting yourself? You're hot micing a little bit.
I'm sorry, my...
Thank you. No worries. What this movement has showed me is that individually, retail are probably no bigger than ants to major hedge funds, super pharma companies and conglomerates. Like on an individual level, we don't matter. We're a number. That's it, and that's all we're good for to them. We are nothing more than a bag holder or a just a number to be moved from one account to the next. But as a collective, when you bring hundreds and hundreds of people together to push back against a wrong that's been forced on us, it has power. Like water sitting in the ocean doesn't destroy anything until the wind pushes it all in one direction. And that's what creates waves. If you're going to make a change in the world as we see it, then everybody has to push in the same direction. So that was the main thing that I wanted to cover here on this call. Again, if you're in the field, please feel free to jump up here and have a chat with me. I'd be happy to talk to anyone that's in the field. For right now, I guess we can cover a few more things as it relates to the overall market. Excuse me, I need to kick somebody. So now we get to the other fun. News. So,
hey, True Demon, I have a quick question here. I clicked
sure.
the link that you shared, and it says this petition is not available. Either the URL is incorrect.
Let's see. Maybe the petition's no longer valid. Maybe it was removed. It violated our community guidelines. Interesting.
Nice.
Great. So that petition has now been taken down for violating change.org's community guidelines, which I find interesting.
You know,
I didn't see anything wrong with it.
Here's another really interesting thing. Like, do you know what's going on in Canada right now with all those trackers?
No.
So they have a campaign on GoFundMe about like some mandates like in Canada, and like GoFundMe suspended that campaign as well. So I guess like they just going the route where when the people get like powerful, they just like suspend and start censoring things.
That's really interesting. I never heard about any of that.
Well, I mean, like you can Google it. I mean, like it's really viral right now on the media, social media.
I'll have to take a look at it. Thanks.
Demon, did you say your wife used to be, was it a ER nurse, or what type of nurse was she in?
I don't want to give out too much information just because I closely guard my identity and I want to protect hers. But she was a RN. In the she was it was inpatient nursing.
Okay. Yeah. Did you say 5-to-1 that she was working at patient wise?
Yeah, between 5 and 6 to 1 patient ratio, patient nurse ratio.
That's ridiculous.
Yeah, a little bit, especially in close observation. They did have a close observation unit. So it was usually, I can say it was mostly gastro and liver. So that might give you some ideas.
Yeah.
So there's some additional fun news to talk about that caught my attention today. I'd only heard about this today, but apparently a major records building for TD Ameritrade burned down in Chicago. So if anybody hasn't heard about this, I've currently got it up on my desktop here for the YouTube live stream. But there's a major records keeping building where TD Ameritrade stored customer records. There's not really any details for what exactly was there, but this is a cold storage facility, a secured cold storage facility that just suddenly was set on fire and completely burned to ashes and is totally leveled now.
And let me guess, it's like they don't have a backup. Like
that's kind of what I'm thinking. Honestly, I wouldn't be surprised if there was just I would not be surprised in the slightest if there was just suddenly a massive disappearance of all records regarding their short their borrowed loans and things of that nature. But there's got to be records of that somewhere else. Like somebody has to be holding on to these loans. There's got to be records there and elsewhere.
I mean, like
But
it's like ridiculous, man. Like as soon as like the DOJ like start investigation on them, like that shit start popping up like everywhere. And like I don't really think it's a last thing. Like we will see more and more stuff like that, in my opinion.
sorry, guys. I lost my connection there. I think that Twitter's rapidly becoming more and more unstable. It's funny that as soon as we started talking about this building burning down, that suddenly I'm now having connection issues. Can anybody hear me?
Yeah, I can hear you.
I could hear you.
Okay.
Yeah, you're good.
Thanks very much. Batman, why don't you go ahead and what do you want to talk?
What's up, my man? Thank you for letting me up. I was gonna come up and talk about. I live in Canada, and I just want to do a quick note on. So basically, what the truckers have basically gathered around, and they basically protesting vaccine mandates because I'm not sure who's from Canada here, but I'm from the Quebec province, and basically what they're doing is they're mandating vaccines, and we have to have passports. So they recently, over the past week, have it that you cannot go to anything recreational, but now that made it that grocery stores over, I think, 1,500 square feet are requiring you to show a vaccine passport before you can enter. So the truckers were having the same issues. They couldn't do their jobs anymore without being vaccinated. So they basically started a convoy that went across Canada, and it's still going on to try to protest this. Now, our prime minister is basically putting them down, saying, they're showing racism, they're bigots, this kind of stuff. And the GoFundMe was set up basically to support them because they're obviously not getting paid. and it was at a $10 million mark, and the GoFundMe froze that, like a previous worker said. So that's what's going on. If you guys look it up, it's even on the U.S. news, so you can see that. And the other thing I just wanted to mention, because you mentioned the burning building. So I'm an engineer by trade, and I spent about 5 years into the fire system installation and the design process. So right now, the news that's coming out of that is saying that, you know, the fire, the last thing I read was saying a rack fell on the fire system and it malfunctioned, but it was originally, originally it was functioning. I don't believe that to be true, simply because, first of all, one of the things that was written in the article was saying that there was paper piled up all the way to the ceiling, which is a violation of building code. You're not allowed to have anything obstruct the fire suppression system. And the way a fire suppression system is designed, you know, you can't just knock over like a part of it in the ceiling and then the whole thing malfunctions. It's still going to function. So if you guys have seen videos of the burning building, it's burnt like as if, like, you know, an accelerant was put in there. This is, again, my opinion, because I'm not on the ground, but if you guys look up the videos, the fire is burning so hot, you can see it's gone to ashes. It's not like, you know, a paper fire quickly gathers smoke and it puts out the fire on its own, unless there's an oxygen or unless there's an accelerant. So you guys can even take an example of that is in 9/11, when what happened to the towers, mostly office supplies are papers, right? So it's a bunch of papers in the office supplies, and you guys can look up the 9/11 videos, and you can see that there was a lot of black right now, that this place like burned to the ground. Like, I don't understand how a paper fire can do such a thing, and building codes require that, you know, everything will be fireproof, the doors will be fireproof, and you guys can look up articles that were released on that building which states that it is weatherproof and fireproof. So for a building to burn down like that, to that level, without like the fire department not being able to control it whatsoever, burn to the ground, it's to me, it's unbelievable. Like I'm hoping that the DOJ is obviously seeing this, and they're going to do an investigation. And they were holding TD Ameritrade files, as far as I've been reading articles on. So again, I think this is developing, but it's just something to keep in mind. I've worked in this field, and to me, this is not possible. So, but we'll see.
It's not even just TD Ameritrade either. It's
yeah.
Charles Schwab as well.
There you go. Yeah. So, you know, it's just a lot of coincidences, right? And Ken Griffin was on a plane out of the country today. It's so weird, you know, all these stuff going on since the transparency thing passed. And yeah. And next week, the SEC is going to post another ruling that they want to pass. And I believe it's on settlement times. So that's a big one, too. I think we should all stay loud and stay conscious of what's going on and show that we're watching them. So I appreciate you hosting the call, and I appreciate you letting me come up, man.
Yeah, of course. Thanks for joining. So as that was actually really fascinating to hear. So I'm a cybersecurity professional as well, but I used to work as a data center tech. I used to work as tech support, and I also assisted with managing like data center failover systems. And in the course of my work there was also there was also a part of the company that I worked for also had physical paper records. Now the for each of these types of buildings, just continuing on with this hilarious just comedy of errors that had to take place for the fire suppression systems to fail at a building like this. Let's explore things like the data center, like data center fire suppression system.
Hey, True Demon.
The way that these things work. What's up, man?
What do you need to know? That's like a financial data center. It should be like 100% at least like a tier 1. And if you want to know like what's the tier 1 data center is, like just go and read it. It's like, it's not just like your regular house apartment.
Right. And that's exactly my point. There's redundant systems for any type of building or any storage facility or data center, whatever you want to, whatever you may be talking about. These types of buildings that are storing secure data and records that are subject to audit must be maintained in such a way so that they have redundant failover systems. And just like we were just talking about, for those systems to fail and for the fire to burn in such a way as to imply that an accelerant was used, I'm not a specialist when it comes to fire. I've never worked for the fire department. If there are firefighters here that would be able to identify that, I'd love to hear your thoughts. But the fact that that building just completely burned to ash to the point where the fire was hot enough to melt steel is, I find it really hard to believe that the fire suppression system broke down entirely, because I have to imagine that the fire suppression system didn't just use water, but it may have also used halon, which is basically it's a type of fire suppression system that releases a gas that steals oxygen out of the room. It reacts to oxygen and binds with it in order to rapidly suppress the fire by starving it of oxygen. And that's the type of fire suppression systems that are used in data centers to protect the computers there. Robert, you've had your hand up for a while. I didn't mean to hold you up. What do you got?
Hey, thanks for letting me talk real quick. So the main point that I had, or that I wanted to touch on, was that I think they're obviously trying to divert the attention of people that have their eyes on the whole situation about the burning building. Obviously, everything that they had in that building, they could have a digital copy of it, right? So for them to burn down a building that had a bunch of paper documents, I mean, paper is essential, but it's almost obsolete. You don't absolutely need a hard copy if you have a digital copy, right? So if they set the building on fire and everybody knows it, or everybody's, thinking the same thing, I think that they're trying to, divert our attention to that. And everyone's going to, get together and they'll be like, oh my God, these guys are trying to cover up something. But at the same time, I think they're trying to, like I said, divert our attention to that so that they can focus on another agenda, possibly, I don't know. I mean, obviously, we all have a certain idea what they're trying to divert our attention away from. But yeah, I just wanted to touch on that. It's just too convenient that they would burn down the building. So, and people that don't think with, the tin hat ideas that we do sometimes, you know what I mean? I just think that that they're thinking that people are just going to jump in and say, yeah, these guys are doing something wrong. But I think it's a ruse, and I think they're trying to divert our attention to that opposed to something else. That's all I had to say. Thank you for having me.
No worries, man. It's an interesting thought, and you could be right, but I mean, a massive destruction of records. If it's going to distract anybody, it would distract the DOJ. But I don't know. What I find interesting is the parallels to it parallels y'all might laugh at me for this, but it parallels plot of a TV series called Mr. Robot. Huge fan of that series, and spoiler alert for anybody that's interested that hasn't seen it. But the entire plot of that story is a group of hackers that is seeking to create a financial meltdown in order to take down the world's largest conglomerate. And they do so by basically installing ransomware into their data center and completely wiping all of their credit debt records from all their servers. as the plot develops, one of the major failover systems for this massive company that wants to, recover all of its records and data in order to enforce all of the debts that it has power over, the debts that it holds, it needs to enforce paper records. And one of the major plot points is that the group of hackers has to destroy these paper records, which are stored at multiple different storage facilities redundantly throughout the world. But all of that is bypassed when all of the paper records are consolidated at a single facility, which they can then destroy in order to wipe out all the remaining records. And I know I'm like throwing my tinfoil hat on and getting into like pop culture references and things like that, but it is very accurate. I would say the show that I'm talking about in how companies like this structure their record keeping. Most of these records are held digitally, and just like Robert was saying, there's digital records of all of this stuff. Just because these paper records were destroyed in this fire doesn't mean that the records don't exist somewhere else. But what I will say is that it's vastly easier to wipe out digital records. It can happen in a blink. And I know this because I did I did forensic work, digital forensic work, and half of my clients were companies that suffered from a massive ransomware attack. And it hit so quickly that it instantaneously wipes out all of their main records and their backups in just minutes, and it encrypts it irreversibly. And it's not difficult to irreversibly encrypt something. Short of us developing quantum computers with the algorithms that we have now for encryption, it's possible to create a key to lock data up such that the only way to replicate that key would be to brute force that key, which is one of literally an impossibly large number, a number that equates to more atoms than exist in the observable universe. That's how many possible keys there are to the American encryption standard 256-bit encryption algorithm. That's the strongest encryption that we've developed, and that's the encryption that is mandated by the excuse me. That's the encryption standard that's mandated by U.S. Department of Defense and Department of Justice for government-level encryption. So it's literally impossible to brute force these keys with the technology that we have. So for somebody to irreversibly destroy all the digital records, if there was something that was truly too big to allow to be known, that the last record that was held on a digital system, it would not be very difficult for them to wipe it out entirely. What would be difficult is if those records were held by multiple entities, and if just one of them is not willing to shut up. So I would hope that this digital paper records building going up in smoke is just a ruse, or is just smoke and mirrors in order to get people focused on that and take their attention off of other things. I still think that it's quite hilarious, all the events that are going on surrounding this fiasco that retail traders have created in the U.S. stock market just in the last year. And then the other half of that that I was that I was that I had noticed, I believe that Trey from Trey's Trades was talking about this on his stream earlier today, was that Ken Griffin's plane took off from Chicago this morning and landed in London. I think it's hovering somewhere over it's hovering somewhere over Finland right now. I'm not sure if it's landed yet or what. Looks like the plane has landed somewhere in Finland. Or has it lost its interesting. I have no idea where this plane is. It's been in this spot on the map for adsbexchange.com. If you wanted to take a look at the flight path for this particular plane, the plane's tail number is N302AK. Over Scandinavia, and it's been in this spot over Finland, according to the map, for several hours. I have no idea if the plane's landed or if it's just not, if its location has been lost. That's very interesting. Man, quiet group today. Nobody wants to come up and join us. We can talk about anything you guys want now. I've got another hour. We can talk about anything from stocks to news stories to anything that has to do with the nursing and staffing shortage at hospitals, whatever you want. Go ahead and go back to my trading view charts, since we're just hanging out. Kind of wanted to evaluate some of the other market plays that have been going on since the SPY has gotten hammered repeatedly. CEI and PROG. All right. Looks like CEI is consolidating at 55 cents. If you guys want to come up and speak, feel free. CEI is not one that I know much about. I just know that it's had frequent reverse splits and it squeezed back in September pretty big. And then Progenity. I gave my thoughts on Progenity earlier. It's still in this area of supply, but it's had 3 higher lows back to back, and it's now getting ready to break out above $1.60. I'm looking for it to hit resistance at $2. Hey guys, thanks for jumping on the call.
Hey, I had something I wanted to talk about. You know, I watch everybody, and I watch Lou from Wall Street, and he had an interesting. It was actually a space call. Yeah, so he was on the phone or space call with like another hedge fund guy or whatever. But he was saying something about predicting the squeeze or something happening somewhere like this between, I think it was February and March. He was saying something about how, you know, they're redoing the system, like this T+0 system, right? So they know all this fucked up shit's happening in the market. They need to close it all out and then they're going to transition to this T+0 system. I think it's called
instant settlement.
Instant settlement. Yeah, I forgot the project name, but yeah, instant settlement or something like that. So, that was a couple of days ago. I think it was like Monday or something like that. But I don't know, given all the things that are happening now and everything happening in the market, Express popping up a little bit. I don't know, just a lot of crazy stuff's happened this week. So I just wanted to know, what your thoughts on it. Anyone else heard about that?
Yeah, absolutely. So, instant settlement is something that Gary Gensler is talking about, and I believe his predecessor, the chairman before him, and I forget his name, so I apologize for that. But the market works in days of settlement periods. So you've probably heard of like T+2, T+21, T+35, and stuff like that. What that's referring to is the transaction date, T, plus the number of days for the trade to settle. And what that's referring to is the number of days that it takes for the trade to be completed. And in order to complete the trade and then transfer that ownership over to the new owner of that share. So when you place a buy order, what happens is your order gets sent to the market. Somebody on the other side says, I agree on that price. They sell you that share. You get that share and it's marked in your account. And then it has to go through the clearinghouse and the broker's system in order to transfer that share to you. And they get 2 days to complete that process. That's 2-day settlement. That's the system that we're currently on. Instant settlement would mean streamlining that process so that it happens in real time, which we've had the technology to do this for the last decade. And the only reason not to is because it benefits market makers and other market brokers, because that allows them to shuffle around ownership and profit off of things like the market makers make money off of the bid and ask spread. So they're able to purchase shares one day to fulfill a bunch of trades, shove the price down by a variety of different techniques, and then buy back those shares at a cheaper price, and then deliver them the same day before the due date. So it's it's basically a system like where people say, I'll buy it for $10. And then the market maker says, okay, we'll mark this share for $10. That's what you purchased it at. Cool. And then they go down, short the holy hell out of the stock, shove the price down to $9, buy back all of their shares slowly over the next 2 days. And then they go and deliver that share back to the person at $10 and say, cool, there's your share. We delivered it in time. We made it by the deadline. By the way, we'll happily buy that share back from you for $9 now, bitch. And that's basically how that system works.
Yeah, true, Demon.
Cryptocurrency and Robinhood, that's what led me to all this. Like, there's no ledger on Dogecoin when you buy on Robinhood. There's no, you can't transfer it out. So how do we know we actually own it? So I have a feeling that motherfucker took all our money, dropped the price of Dogecoin because he's the largest holder of Robinhood. And then, everyone already sold out by then. He collected probably so much profit. And I guarantee they do the same thing with stocks. Gary Gensler just said 95%.
No, hold on. You said Dogecoin? You said Dogecoin? Dogecoin's on a ledger.
No, on Robinhood, when you buy it through Robinhood.
Oh, right. Well, the trading system is definitely more complicated than the blockchain, I feel like, because it goes through so many different firms. But yeah, to your point, what I think you're saying is that if all of these transactions were placed on a blockchain ledger or something similar so that the transaction was settled in real time and you could prove ownership in real time, that it would eliminate a lot of problems. Yeah.
And True Demon, on the T2, you're only talking about like a settlement day, but what about FTDs, which gives a market maker, I think it's a T35, right? So they have
we can talk about that afterwards. I just wanted to give G a chance to finish his thought.
Oh no. So basically, I think sometimes it's T plus infinity. There's so many shares they never delivered on AMC and BBIG, especially. BBIG's been on the FTD list 7 times in the past year, in the past 365 days. That's insane. Insane.
Yeah,
it's been on the threshold forever.
Yeah, so that's what thing I think they're saying. They were saying something about like how everything's piled up, it's gone out of control, and now the SEC stepping in. He's saying, Kenny or whatever, all the hedge funds, Susquehanna, and all that, sit back. You already fucked up. We're here to take it over, and that's like the thing that's going around in the hedge fund world is like, this is all happening. Like, they're actually investigating. We get that tweet from the DOJ that they're investigating like 60 different hedge funds and stuff for short shifting, abusing the short system and all that stuff, whether it's failures, not failures to exempt, but exemption shorts,
the short exempts.
Yeah, short exempts, there you go. So it's like they're abusing that, they're abusing FTDs, they're abusing pretty much all that stuff, even going into the chain and buying puts and all that stuff. So but it's a complex crazy.
It's a complex system, and I understand what you're saying. The T plus infinity though is what I disagree with, because T plus infinity implies that they're able to carry this risk infinitely and never have to cover their positions, and I don't think that that's possible. The reason why is because somebody has to hold this bag, right? So anytime a short is taken, even if it's a naked short, somebody has to mark that position. If they're adding supply into the market by naked shorting, that is selling a share without taking a borrow and shorting it into the market, that position still has to be marked somewhere as evidence. That money, that share has to come from somewhere at some point eventually, unless the trading system is entirely fucked up to the point where they can just be like, I'll just go ahead and add another share to the server, do, and it's done.
No, but
like, and I doubt that the system is quite that simple.
Yeah, but they take that time. Average retail doesn't hold. Sometimes doesn't hold for average like 2 days. So if they do all that, right, short exempts and all that, I think they have legally 6 days to pay that back. But if the price drops by then, that's where their profit comes in.
Right. Yeah, that is what I've been talking about for close to. I'm trying to remember when I think it was like April, May or so that I started talking about that heavily.
Demon.
And then I think a lot has to do with using your broker. These payment for order flows, Robinhood, Webull, all that stuff. TD has a really good platform. I think a lot of people pay for unusual whales, but TD offers it for free. They have a time and sales of options, all free. And TD, I don't know what the commission is per price, but sometimes maybe even just buy your order. A lot of people, they buy their options, off these because they get better execution on price. So Robinhood, you'll see like at 60 cents or something. On TD, you'll get it for like 68 or 55 even sometimes. I think it's definitely worth it. I think retail transitions to like a self-clearing broker, like TD or something like that. There's a lot of shit with Fidelity, but Fidelity does it. If you download their Fidelity Active Trader Pro, you can buy your orders, or you can route your orders straight through the lit exchange. I think that would.
That's why I use Fidelity. I use Fidelity for that exact reason, because of market directed orders.
Yeah, definitely. I think if retail does that, I think we have a way bigger hand, because these 60 to 95% they're just not going through, and then like even T plus 35, that's way too long. And by then everyone already sold, so the price has dropped and everyone's fucked.
Yeah,
so
I agree.
That T plus 35, and then how they say they can extend it even after that, that's just insane. So that's what I was talking about, infinity. But they eventually.
Yeah, I understand. You're just continuously rolling the position, in order to extend out their due date by another 35 days. I understand what you're saying. The reason why I disagree is because every time that they do that, they have to assume a new level of risk. So even though they can technically keep opening up new positions in order to extend that due date and keep delivering on the failures to deliver and then reopening them up after a certain period, yes, they can, but they lose money every time that they do it. And the more they lose, the less power they have to push the stock in a particular direction. Cran, I think you had your hand up for a while. Did you have something, man?
Yeah. Hey, Dan, I appreciate you letting me up. I guess my question kind of plays into what you were just talking about in regards to cost to borrow. Everybody says these hedge funds are bleeding for what they're carrying, but nobody has really explained, what does it cost them daily, monthly, you know, if they are FTDs, do they still have to pay it? What's it costing them at a bare minimum? If it's 115 million, let's call it, out on loan, what is it costing them to carry it?
Sure. So you can think of cost to borrow as an APR. That's an annual per diem interest rate of interest.
So is it variable?
It is variable, yes.
Okay.
Cost to borrow varies daily based on supply and demand and the utilization of the shorts that or the borrowed stock. So cost to borrow does change regularly, and they pay the current they pay whatever the current cost to borrow terms are for the broker that's marked their position, or technically the person who lent the share. So whoever the lender is the one who's making the money. However, the problem is that the broker's handling that on behalf of those who are lending out the stock. So how that happens behind the scenes in the back end is not very transparent. As far as actually calculating how much they're paying, what most people have done is you can apply the per diem, the APR formula to the CTB, the cost to borrow percentage, based on the average cost to borrow. So how that works out is essentially you take a daily rate of interest loan. Let me see if I can go and find the formula.
Appreciate it. And so in regards to what you were talking about, someone's holding the bag. Are they still paying on that as well? Or can they just somehow make it disappear?
So they cannot make it disappear, but it's a complicated. There's a complicated answer there, and I actually wish that I could get Mark Cajotes here to answer that question. Mark Cajotes is probably the most knowledgeable person that I could speak to on the topic. But what I gleaned from my conversations or just listening to him speak was that broker dealers are the ones who are the main bag holders when it comes to the risk of these naked shorts. The reason is because the broker dealers are the ones who give out the shorts for hedge funds to borrow, and they are the ones that know whether the short is naked or not. The hedge funds usually don't know. They don't have that insight. The short simply goes to the broker and says, hey, I want to short this stock. And the broker goes, okay, let me go check our inventory of lendable shares and see if we have any. And the broker dealer, the way it's supposed to work is they go back into the inventory of lendable shares, and then they say, okay, we have this many shares that are available to borrow, and then they hand them out to that person, and then they say, okay, great, we'll go ahead and take that and we'll short the stock. That's how it's supposed to work. When they run out of inventory, they're supposed to go say, sorry, there's no shares available for borrowing, you cannot short the stock. And then the hedge fund says, damn, too bad, I guess I'll have to go and find another one. And they move on. The way that naked shorting works is the broker dealer goes into their inventory and says, well, shit, we're all out. We don't have any shares, but I really want to collect that cost to borrow fee and make some money. So I'll just write this number of shares available onto our books, and I will assume that risk. And the broker dealer goes back to the hedge fund and says, we will lend you out these stocks for you to short into the market, and we'll collect your borrow fee. We'll just collect the borrow fee. And then what happens is the hedge fund just says, great, we'll take it. But what the hedge fund doesn't realize is that they took stock, they borrowed stock that didn't exist. And it's the broker dealer that needs to deliver that stock to whoever the hedge fund sells it to. That's where the failures to deliver come from, is that the shares never actually go through the settlement process, and they don't reach the person who bought the share that was sold short.
I completely understand that. I appreciate it. Again, just trying to calculate exactly what their pain level is on a daily basis. It's next to impossible at this point.
Calculating it is extremely difficult. I believe that, yes, Ally has an article on it. Yeah, ally.com has an article on calculating cost to borrow or the hard to borrow fees. And then there's also a let me see. I had the formula saved somewhere at some point. I wish that I still had it. But if it essentially amounts to, I have to write it out so that I actually can make sense of it.
Yeah, no worries. No worries. I appreciate it.
I will find it for you because I would like to I would like to go and find it.
Thanks again.
Kat, if you can help me out, it's difficult for me to chat and Google at the same time, but I am looking for that. I'm looking for the borrow fee rate of interest so that we could let everybody know. I'm pretty sure it's ally.com that has the that article on it. Man, I can't believe that I let that formula go. I had it handy at some point.
But Demon, just one more thing. So, I mean, the formula would be great, but we have nothing to calculate if we don't know what the brokers have actually lent out. Right?
Yeah, that okay. I understand what you're saying. You're talking about all the naked shorts that are not accounted for,
or even the ones that are. Where are they allocated to? Who has them? How many do they have?
Yeah, you don't have any way of knowing it on an individual basis because we don't as a market we don't actually record who holds short positions in the United States, which I think is stupid. That seems entirely that seems entirely backwards. It probably will change after this because I don't think that it'll be possible for them to. I don't think it'll be possible.
Last week they voted on something, isn't it? I mean, they actually voted to provide data on a short data from brokers like every single day.
I'm sorry, you were cutting out a little bit, and I couldn't hear the rest of it.
I said, I think the last week the SEC voted to brokers to provide like a short data every single day, isn't it? A honey badger knows that.
Oh, if we're talking about instant settlement?
No. I mean, I'm talking about like on the short data. So basically, the broker should provide the data who shorted the stock on this every single day.
Gotcha. Hey, I got that formula for you, Crane. Thank you very much, Kat, for getting this to me. So, in order to calculate the cost to borrow, what any individual is paying on their fees, I've actually got this. I've got this streaming here on my. I've got this streaming here on my YouTube channel. So if you want to come by and take a look at it,
Awesome.
Oh, let me go ahead and switch that out. There we go. So hard to borrow fee. What you do is you multiply the price of stock by 1.02, which I think that's a conversion value for the shorting total. I forget what the value is called. That gives you the share collateral. Multiply share collateral by the number of shares. Then multiply that by the annual hard to borrow fee. And that the hard to borrow fee is just the current average borrow fee divided by 365 days. And that'll give you the date.
Appreciate it.
Yep.
Thanks.
So if the cost to borrow is 100%, then it's 100. It's 1 divided by 365.
Perfect. Thanks again.
Yeah, no worries. Just out of curiosity, I think I'll go ahead and run this formula against AMC and maybe some of the other ones, just so that we can actually like illustrate this to everybody and see what kind of fees these guys are actually paying. If we were to account for all of the known accounted short shares in the market for these particular stocks, then we can see what these guys are paying on a daily basis. Let's see.
Here's another good question I have. So let's say I own shares of BBAG, right?
Mhm.
And I turn off my borrow function, right? So how I can be 100% sure that my broker not going to be lending those shares to anybody else?
That's the beauty of it. You don't. You don't have a clue.
Yep.
There's no way to
exactly.
know. There's no way to actually know that they're being honest about it. And they're not incentivized to be. And they hold all the records. So there's no way